Markets are very excited by the positive sentiment, sound bites coming out of the trade war. But is this positive movement different this time? And how credible is this phased approach that they're taking?
Well, I think it's probably too early to celebrate, and I've been following the news like everybody, both here in Washington and in Beijing. And I think it's really quite premature to say that there has been an agreement. If you read between the lines, there's still negotiations going on. And as we know, we have been here before. And even if there is an agreement, I don't want to put a cold shower on things, but even if there is an agreement, that doesn't mean that it will stick. So I think there's a lot of room here to be concerned about whether or not we have a durable solution at this juncture.
You've made an interesting point in your previous speaking engagements that U.S. economic policy is mirroring China's policy more than the other way around. What exactly do you mean by that?
Well, if you look at one of the deals that Mr. Trump is really quite keen on is to boost China's agricultural purchases from the United States. And these are, in essence, government-to-government deals. And that certainly flies in the face of the usual way that markets work, at least in the United States, where it's the private sector who is making the transactions. They can certainly sell to governments, but where a government arranges with another government that really borders on state-to-state types of transactions, which are really not the usual practice for the United States. And so that's why I begin to think that we are beginning to behave, now whether it's a long-term trend or not, I don't know, but we are beginning to behave more like the Chinese in some sense than they are behaving like free marketeers.
So what does that mean when it comes to growth in the U.S. then? If we're mirroring the policies of China right now, I mean, if you take a look at the economic picture in the U.S., it looks like it's much more favorable than what we're seeing in China at the moment. Is that a sign that the U.S. is winning in this trade war?
No, I don't think, first of all, I don't think it's a sign about the overall growth of the United States economy versus China. China has lots of internal contradictions in its economy, and it is slowing down, which has little to do with the trade war. The United States economy, I think, generally is much more robust due to its underlying fabric and large market and free market generally compared to China. But I'm not drawing so much attention to these state-to-state deals. That means that the United States economic policy overall is becoming like China's economic policy. I'm just saying, and as a way of settling a trade deal or a trade war, to engage in state-to-state transactions is a little bit odd. But I wouldn't overstate the case that means that the United States is becoming like China. But it's odd that we have the government trying to line up big transactions as a way of satisfying Mr. Trump's really his universal metric on this whole trade war is the merchandise trade deficit between China and the United States. Most economists, I think, would tell you that simply looking at the magnitude of a bilateral merchandise trade deficit doesn't tell you very much about the real economic interactions of either economy in a globalized marketplace.
And you touched on it here, Harry. The content and substance of phase one, it appears, does seem to support President Trump's narrative, if you will, into the 2020 elections, almost like a purchase agreement. Now, my question is, once that's done then, the prospects for phase two, will Donald Trump have any appetite to pursue a phase two because he's pretty much gotten what he wanted?
Well, don't forget, phase one, at least as we know it, and we haven't seen any agreement, right? But phase one really is dealing with the tariffs on $112 billion that is basically on consumer goods. Phase two, which would be the larger tranche, where we have now currently 25% tariffs on $250 billion, those are much more strategic goods that the Chinese are selling into the United States market. And then there's the third tranche, which we haven't gotten to yet, obviously, but that's the pause for tariffs on consumer goods that was paused till after, sometime just before Christmas, if you recall. So right now we're really dealing with a phase one. If by phase one, all sides are focusing on the first tranche of this $112 billion where there's a 15% tariff. We just don't know how they're defining these phases. At least I'm not aware of how they're defining these phases at this juncture.